Very good afternoon to you, Osho. Thank you so much for joining us on ET Now. And the first stock that you're going to talk about is Nbcc. How is this one looking on the charts to you? Do you think now with the dip in the market, it's the right time to buy this PSU?
Very good afternoon, everyone. Well, talking about current market conditions where all the stocks are basically in the downtrend. So overall, we have to look for those counters which are having a sustainable on the higher trend. So looking at the technical chart of Nbcc, this counter has seen is in a very positive trajectory for the current financial year. And even on the technical charts, it is hovering just near the 21-day exponential moving average. So overall, the setup is still intact. The positive setup is still intact in Nbcc. And on level specific, the zone of 60 to 58 is likely to have a very strong support or very strong demand zone. So from here onwards, one can expect a strong upside movement in this counter in the coming period for the immediate upside of 68 followed by 74 levels.
Positive side is still intact for Nbcc. That's the word from Osho. Bank of India, Osho, what is the charts now indicating for Bank of India? Last 1 month specifically, we've seen a decline coming in on Bank of India. So at current levels, would you say a buy or would you be staying away from Bank of India?
See, overall, if we will be looking at the technical setup, then from the current zone, from the zone of 85 to 86, we have seen a breakout of double bottom pattern in this counter. So from there onwards, it has seen a very strong rally towards 112 odd levels. But in the recent period, it has again corrected and currently hovering around 88. So again, it is going to retouch the neckline of breakout zone, which is approximately around 85 levels. So from there onwards, even it coincides with the 200-day SMA. So that means from here onwards, we can expect some kind of breather or some kind of consolidation at current levels around 85 zone. And from there onwards, we can see slightly higher upward movement in this counter. So one should try to have or gauge the momentum as of now. One should try to accumulate this counter around the zone of 85. And from here onwards, one can expect a decent up move towards 95 followed by 100 levels in the short-term time frame.
Around 800, 900 levels. But again, in the last 1 month, we're seeing a bit of a subdued performance coming in from Nazara Tech. What are the charts now indicating for this?
See, overall, it was making a very strong formation on the higher end, but because of the overall sell-off in the market, there has been some kind of correction in this counter. But even at current levels or somewhere around 750, 760 odd levels, we can expect a breather in this counter, followed by 730, which is expected to be a very strong support zone for Nazara Tech. So any dip towards 750 followed by 730, one should try to accumulate this counter, but in a staggered manner, because there can be some kind of blips in the IT overall space. So for the recent period, 750 should be acting as the immediate support, followed by 730. But from here onwards, on the broader term time frame, we are still bullish in this counter and expect again 800 to 850 levels to get retested for Nazara Tech.
Alright, moving on. Ashesha, let's talk about Sonata Software.
About another stock, and this one actually has doubled in terms of last 6 months when you look at the returns. From around those 100 levels at currently 200 levels, that's Parag Milk and Osho. On the charts, would you still continue to hold Parag Milk or is it time to start booking profits for this one?
See, overall, as you have mentioned, the counter has seen a very drastic up move from the zone of 80 levels and it has moved towards the zone of 220. But on the retracement, the counter has currently retraced around 23% on the current rally. So from here onwards, there can be some kind of subdued movement, but till the time the levels of 190, 190, 188 is getting intact, one should remain holding the company. If there will be any breach below 188, then one should try to exit from the counter, because on the lower end, there can be some kind of dip towards the zone of 170. But at current levels, one should be very much complacent with the sell-off. They should remain intact their investment in this counter. From here onwards, we can even expect a higher trend towards 220 in the coming period. But a strict stop loss should be maintained around 188 levels.
So coming to you on the technicals, you've picked out NAM India for us. That's Nippon Life India Asset Management Company. When you look at it in the last 6 months, surely we have seen an up move of around 50% for the stock. From here on, what should we be expecting?
See, overall, the technical structure for NAM India is still positive, because if you will be looking at the recent period movement, then it has seen a very steep up move from the zone of 330 towards odd 400 levels. And in the recent 2 weeks, there has been a very gradual decline, which has retested the bullish gap for this counter, which was approximately around 335, 340 odd zone. So from here onwards, if we will be looking on the technical formation, there has been a hammer formation is being seen in NAM India at the 21-day exponential moving average. So overall, it's a very positive sentiment or positive development on technical charts. So from here onwards, we can expect a gradual up move on the higher end towards 390, 400 odd levels once again, and on the downside 335, 330 should be seen as a very strong support zone. So any dip towards 335 should be seen as an opportunity to accumulate the counter for the upside target of 390, 400 levels.
Okay, keep an eye out on those levels for NAM India on Nippon Life, as we know it has. Let's move on to the. We want to talk about persistent systems, Osho. Charts, what are they indicating for persistent system now?
See, overall, the IT space is witnessing some kind of hammering, but looking at the chart of persistent, it has been hovering or it has been consolidating in a very narrow zone from past 3 to 4 weeks. So overall, the technical perspective looks very positive. Overall, it is hovering just above the 21-day exponential moving average. So from here onwards, if there will be any gain in the market or any relief that can be seen in the IT counters, from here onwards, we can expect a very strong movement in persistent for the immediate upside of 6,000. And once it breaches the zone of 6,000, then from there onwards, we can expect another 300 to 400 points of upside movement in this counter.
Keep an eye on this level. Let's move on. That's Anthony Wace, but we will talk about Aurobindo Pharma now. And Osho, Aurobindo Pharma, how are you looking at the technical levels for this one? When you look at it in terms of today, a bit subdued on trade, last 5 days, bit of a correction that we've seen coming in. But before that, we've seen a run-up already come in for Aurobindo Pharma in the last 5 to 6 months. So now, what should one be doing with Aurobindo Pharma?
See, overall, the pharma space has been seeing a very strong sell-off. And comparatively, Auro Pharma have seen a very less fall in the recent period. But looking at the overall technical perspective, for the first time, this counter has witnessed a fallback or witnessed a breakdown below the zone of 50-day exponential moving average. And overall, if we will be talking on the very specific front, then a closer below the zone of 850 can be seen as a negative setup on the technical charts. And from there onwards, we can expect 25 to 30 odd points on a very short-term perspective. So today's closer will be very much crucial to witness that whether there will be a follow-up sell-off in Auro Pharma as well, because any closer below 850 can drag the counter towards 820 on an immediate basis. So we need to be very watchful in the current period, and even a follow-up sell-off can trigger a very strong sell-off in Auro Pharma in the coming days.
Okay, that is Aurobindo Pharma. Let's just bank holding on to gains. Numbers is something that is supporting it, but our charts also supporting the up move.
Obviously, if we will be looking at the technical chart, it is one of the outperformance from the banking sector, because no doubt it has been on the negative on weekly basis, but it has been comparatively less fall. It has fallen less as compared to the other heavyweights in the recent period. But if we will be looking at the broader term time frame, then this counter has been able to maintain the higher highs, higher lows pattern till now. So on the downside, till the zone of 935 to 940 is sustained or is maintained in this counter, we need not have to worry. It's just a matter of time. From here onwards, again we can witness 1000, 1020 in Axis Bank. So overall, technical perspective, we are witnessing some kind of reversal kind of a pattern on the daily chart. But from here onwards, one can stay on the bullish front for Axis Bank, as technically also and fundamental also both are in the favors of bulls for Axis Bank. So 1020 should be the immediate target for short-term traders.
20 an immediate target for Axis Bank coming in from Osho. But with that was the last talk for today. So thank you so much, Osho, Amar, Ankita, as well as Ashesha for joining in with us on the show.